My name is Tenio Howell-Hazy. I am the Acting Director at the University of Commonwealth Caribbean Business Development Consulting Institute. Today, we will be discussing some of the financial opportunities for SMEs in Jamaica. Our guest speakers today are from Exim Bank and First Global Bank. But first, let me let you know what we do at UCC BDCI. So starting a business is no small feat. Many have tried and failed. But does that not mean that you have to be one of them? We have been forced to adjust our lives and how we do business to adapt to our new reality. But in order to change and cope with these new complexities, it is important that you have a solid foundation and the requisite resources to support the process of adaptation. Financing options help, right? Yeah. Knowing what is out there and the steps for success makes life a little easier. We know meeting with your preferred lender is always a stressful situation, and sometimes having prior knowledge is a plus. So at UCC BDCI, we have made it our business to help those businesses. We are dedicated to helping launch entrepreneurs of micro, small, medium enterprises who are seeking to bring innovation to market, enabling our clients to capitalize on business opportunities. BDCI aspires to be known as a premier business development service organization in Jamaica, and by extension, the Caribbean, contributing to the creation of a globally competitive platform for micro, small, and medium-sized businesses. So now I'm going to go through what we do. About UCC BDCI. We are an operational unit within the University of the Commonwealth Caribbean and a member of the JBDC Small Business Development Center Network. We are a Dbj approved business development organization, or BDO, for micro, small, and medium-sized enterprises. And vouchers for technical assistance can be redeemed at our office. The UCC BDCI was established to provide business advisory consulting services to entrepreneurs and existing businesses. Our focus is on micro, small, and medium-sized enterprises. Our goal is to contribute to create impacts that support economic growth through fostering innovation and entrepreneurship. UCC's BDCI is a registered business development organization, and we are affiliated with the Development Bank of Jamaica and offer facilities such as technical assistance vouchers that help MSMEs access business advising and training services. Our target clients include Tier 1, Tier 2, and Tier 3. So Tier 1 clients are clients that are now starting up their new business venture. They have the business idea, but they don't know what are the next steps, right? We will help you with that. Our Tier 2 clients are, you've registered, you have your business idea, but you're in the early stages and you may need financing or you may need some help with the business process. You'll have some issues and we can help you work them out. Tier 3 clients now, you're established, you're growing, but you want to upscale. You want to find a way to improve your business. And you can come to us for help as well. So, the services that we offer. In a nutshell, we offer business advisory, business consulting, training, and development. Research, e-commerce packages, as well as back office services, which are our Value Edge and Legal Bloom. Our services include from ideation to market, and that covers the full entrepreneurial cycle. That is the evaluation of your business idea, business model assessment, technical advice, legal advisory, setting up of a company, which we do through our Legal Bloom back office service. We also help with partnering strategies, corporate governance, and team building. So our business consulting services are website development, e-commerce platform, marketing plans, business plans, financial plans and projections, legal advice, digital solutions, just to name a few. Our training and development services is that we offer courses as well, training workshops for persons that want to improve their knowledge. We have courses coming up in summer on costing and ROIs, e-commerce and website design, digital marketing, fundamentals of business plan writing, fundamentals of marketing, record keeping, bookkeeping, understanding financial statements. And all of that can be bought at the low price of $24,000, right? So you can look out for that. We are also a certified business advisor with the Growth Wheel. Growth Wheel is a visual toolbox and online platform used by business advisors, SBDCs, and incubators. This helps you to basically helps you with your decisions. We give you an outline of the basics of what you need to do or what you need to focus on, and we work with you to get you to the point that you need to be at. Our back office services are bookkeeping, accounting, financial management, and that is done through our Value Edge program. Our legal services is business formalization and legal advisory. We help you to sign up for, with companies of Jamaica, we give you advice on contract writing. We help you with permits. So whatever you need, we'll assist. Our research effort is the final component of the Institute. It complements the other areas of activities of the BDCI and supports the academic mission of UCC. The research effort has three elements: research to support data and information for business advising, research to support commercialization, and policy-oriented research. You can reach us by phone, 906-3000. You can go on our website and contact us through that, which is UCC BDCI, through bdci.co. And you can email us at success@bdci.ucc.edu.jm. Now I'm going to introduce you to our first speaker, Dwight Morgan. He has 16 years of experience in commercial banking that includes customer service, insurance, mortgages, retail lending, and commercial lending. He is currently the Business Development Officer at Exim Bank, and he will be speaking with us about SMTES, Special Projects Tourism Enterprise Loan, and the other loan offerings that they have at Exim Bank. All right. So, Dwight, hi.
Morning again. It's a pleasure to be here. Everyone hearing me? Just an indication that at least one person hearing.
I can hear you.
Okay, fantastic. All right. So my job today is to, share some information about what we do at Exim and how, this can benefit small businesses, right? Now, starting a small business, as the host said, is no small feat. And I've come across a lot of small businesses, and a major stickler is security. When you're starting a small business, if you look at the regular commercial banks, they will tell you right off the bat that they don't lend to businesses that are not at least 2 years in. Because for the very first 2 years, you come across a lot of challenges, and not a lot of small businesses do overcome those challenges. So they want to see that, at least you're up and about, and then they can look seriously at your business. That's not the case with Exim though. With Exim Bank, we do lend to brand new businesses. But of course, in lending, it's a risk. So we want to ensure that our risk, we mitigate those risks by asking for security. We have several loans here at Exim Bank. We have short-term loans, and we also have medium-term loans. But firstly, let me just backtrack and say that the business that we lend to are small and medium enterprise. Now, a lot of persons mistake a micro enterprise for small, business. So a jerk chicken man at the corner would probably be a micro organization and not yet a small business, right? So for us, we also lend to persons who are registered. So that's very important. UCC has the incubator, UCC has the facilities to help you when you're just starting out, to say, listen, you're starting your business, you need to, put your business plan together, you need to, put certain finances together. UCC can assist you with that. When you come to us for your loan, we would want you to have your business plan in place so that we know the kind of business you're getting into and that you know what you're talking about, right? Your business plan would give us a fair, good understanding of what your business is all about. We also want to ensure that you understand the financial aspect of your business. So we ask you for new businesses and for existing businesses, we ask you for your projections. So if we're giving you a loan for a 5-year period, for argument's sake, we'd want you to have a 5-year projection because we want to ensure that you have factored in our loan payments in your projections. And the business should be profitable, right? For you to make some money for yourself and of course for you to repay the loan, right? So let me tell you a little bit about the loans that we have that can assist small and medium enterprise. We have loans both denominated in US and JMD. So if you're a business that import, for argument's sake, from overseas, we have that US dollar line that you can have available to you. So when you need to make your orders, you need to pay your suppliers, you don't have to be running to the bank to buy US dollars at that point in time. If you have a US dollar line of credit, that line will always be available to you. And once you use that line, it works is that you would pay down that line in whatever period the loan is. Whether that line is a 90-day or 180 or even a 270 days, that's where you would do your repayment, right? So we have both Jamaican and US dollar denominated line of credit. Also, we have Jamaican and US dollar loans as well. So you can get your project funding in US dollars. Now, let me go a little bit into the SMTE, as the host said, which is the small and medium tourism enterprise. So we lend to manufacturers, we lend to exporters, we lend to a myriad of business, we lend to all of the productive sector. But there are different segments and different loans for different sectors. The SMTE is funded through the Tourism Enhancement Fund. And I hope I'm not racing because I'm just trying to slow down because I want everybody to get a full understanding of, the loans and the benefits to be had. The SMTE, the tourism loan, let's just say tourism loan for short. That loan, persons who are eligible, is not just persons who are directly involved in tourism, but also expands to the linkages companies. So if you, for instance, you supply a hotel with, let's say, some ground provisions, you are qualified under that SMTE for that, loan. Now, let me break down the loan itself and tell you a little bit about it. The SMTE can be short-term as well as medium-term. So you could take it as a revolver as well as take it on a longer term to finance whatever project you're doing, right? The maximum period is 7 years. So we can give you a loan going up to 7 years. The good thing about this particular loan is that because we get the money from the Tourism Enhancement Fund, it comes with some parameters, right? And I'm going to tell you the parameters. The loan is between $5 million to $25 million, and it is at a fantastic interest rate of only 4.5%, right? And that's 4.5% per annum. You're not going to get that, that kind of a loan anywhere else, that kind of an interest rate. But because it's specially funded, we're able to give our clients the benefits that we get from getting the funds from the Tourism Enhancement Fund, right? So this particular loan, and as I said, it goes across industries. You could look at, your accommodations would fall right into this. Your attractions, gastronomy, anything involved, your foods, you have a coffee shop, restaurants. These also qualified, shopping gallery. So if you have a store that sells to tourists, you have a store in the North Coast or even Kingston, as you have stores in Kingston. Some of them are in the hotels in Kingston, and some, even down by the craft market. If you have a location at the craft market in Kingston and you need some funding to assist the tourism enhancement, the SMTE is for you, right? It also spans sport entertainment, because the entertainment industry is interlinked with tourism, right? And of course, we have manufacturers. We have a lot of persons exporting, packaging, food products, and that also can come under this this SMTE, right? The SMTE is not the only product that we have. We have several others, and we're unable to name all the loans that we have here because there are so many. But as I said before, I can just put it in two categories. Short-term loans, which is usually, a year or under, and also your medium-term, which in most instances go between like a 3 to 7 years, right? So the medium-term facility is the loan that you would get, you're funding your equipment, funding, your long-term project. That would be the loan for you, right? Separate and apart from that, let me just touch on some other opportunities, some other loan products that we have that can help small businesses either get off the ground or to help you expand. We have a loan that we call the Reset, the Exim Reset. That facility is also at a great interest rate, just 4.75%. And that one is between 5 to 25 million, right? We also have loans that, and of course, the Reset is mainly for, because we have the SMTE for the tourism industry, we, The reset mainly focuses on manufacturers and other industries, but it doesn't preclude those persons or doesn't exclude those persons from the tourism sector from participating in this as well, right? So you can get a SMTE and you can also get a reset if your business spans both products, right? We have other facilities for, you know, exporters. So if you're exporting and you want some assistance with your pre-shipment financing, you know, Exim is the place to come to. If you are a member of the Jamaica Manufacturers and Exporters Association, we have a special product that we have partnered with them on for a small loan between 1.5 to 3.5 million. Well, that loan is an unsecured facility, and that application actually is done through the JMEA, right? So we have several avenues where small businesses can reach out and get that assistance, whether to start their business or to expand their business. You know, and at this point, I'll just wrap up by saying Exim Bank is here for the productive sector, right? So if you have a good idea, you can put that on paper. You can go to UCC or, you know, any one of the other partners, like, you know, the government partners at Jamaica Business Development Corporation. Once you can get that out of the way, put your business plan together, you know, get some financial advice. You can come to us with your idea, with your business plan, your brand new business, and we will definitely have a serious look at it with an aim to financing your business. Once you have the security in place, that is important. Security has to be in place. And of course, your business should be a registered business. We don't lend to individuals, we do lend to businesses. So if you have a trading as, we will lend to your trading as a partnership, your limited liability company, right? So if there's, you know, nothing further, I'll say if you have any questions at the point where questions are asked, then I'm available for questions. I thank you.
Thank you, Dwight. And I'm sure that there will be some questions afterwards for you. Next, we have Gennardo Patterson. Gennardo is passionate about finance and economics and enjoys informing others of their working daily. So naturally, he became a banker for 8 years. Currently, he is a business banking executive at First Global Bank, and he will be speaking on the offerings that they have for SMEs. Gennardo?
Hi. Good morning. Go ahead and present my screen here. You see my screen?
Yes, you can go into, yeah. Yes.
All right. So, so today I'm here to primarily just run through how First Global Bank can serve you as a small, medium-sized enterprises. What we'll be following is that we've already gone through the introduction. What we'll be looking at next is to say, where do you fall in a SME, MSME really, where what kind of loan facilities First Global Bank has an offer, the loan requirements, the interest rates associated with loans, and then we will move into the question and answer later. So again, my name is Gennardo Patterson, business banker at First Global Bank. Where do you fall? Oftentimes the question comes up about MSMEs, and the question is, in what category do I fall? How do I know that I'm a micro, small, or medium enterprise? There are two indicators that determine where you fall in this segment: is a primary indicator and a secondary indicator. primary being your sales, expected sales or sales per annum. And then the secondary indicator would be your number of employees. For micro, as you see here, it requires that you are earning at a minimum $15 million per annum and have, at a maximum $15 million per annum and have maximum number of employees being 5. You'll be considered a small enterprise where you have earnings in between $15 and $75 million and a maximum of 20 employees. Medium size, you will be considered once you've exceeded $75 million in earning, but not more than $150,000, and have employees ranging from 21 to 50 employees. So that is how you determine where you are along the scale of being an MSME. All right, so we now move in further to the next step. We look at the loan facilities that First Global Bank has an offering. Unlike Exim Bank, we do offer unsecured loans. We range from we have a line of credits, we have demand loans, receivable financing, and we also have cash secured loans. The line of credit range from credit cards, revolving lines, and overdrafts. These are facilities that you can utilize on they're pretty much provided to you on a 12-month basis. You repay them, however, on say monthly for the credit card. Your overdraft, you normally have it for the entire year, so you can pay upon the availability of funds, but a limit is allowed to you that you can overdraw your checking account. So for example, you have a checking account, you probably get a limit of $1 million depending on what you qualify for based on your operation. So should it be that you're waiting on payment from some clients, which normally have delays of up to 30 days, you would have this $1 million that would allow you to debit your account below zero up to negative $1 million, that being your overdraft limit. So once payment against your that is expected, your receivables expected coming, then that will be used to liquidate the utilization against the account. The revolving line is similar to an overdraft, except it is repaid on a drawdown basis. So for example, you have a payment to make to a supplier. You are expecting some payments from your customers, but you need to make payments to your supplier right away. This line has a limit as well, like an overdraft. For example, another $1 million for ease, but you need $500,000 to make some purchases. You would draw $500,000, get up to 180 days to repay that drawdown. Once you've received your payment, whatever that $500,000 that you would have drawn, you would pay interest on that on a monthly basis, but the principal amount of $500,000 will only be repaid at or before the 180 days would have passed. All right? So like the revolving line, the credit card, you normally have to pay this on a monthly basis, but what it does allow you is up to 55 days interest-free. So depending on the time that you would use your credit card, you don't have the cash right away. You can utilize your credit card for your online purchases, your local purchases, pay your taxes and so on, but based on the time that you would make this payment, there's a possibility for you to be exposed to a 55 days where all you'd have to repay is the amount that was utilized on the card. So again, the credit card is something that you can use strategically, and you can even avoid interest in doing so. So it's like having free money, in these days. We look at the demand loans. Demand loans are pretty much loans that are amortized with interest repaid monthly. Amortization and interest is also payable on the reducing balance. That is to say, if you again you borrow $1 million, you pay the first month's payment. The balance on the principal is now $995,000. You would no longer be paying interest on the entire $1 million, but on the amount that is remaining. That's why it says reducing balance. There's flexible repayment terms when it comes to demand loans. It could range from monthly to semi-annually. And this is pretty much dependent on the customer's timing of cash flow. So based on how your business operates, if you are one who receives payments most on a day-to-day basis, then a monthly repayment will be best for you. But sometimes you would provide credit terms to your clients or the nature of your business allows you to get payment on a bi-monthly, will definitely facilitate you making your repayments in such a format, because it allows you for you to be able to match your debt obligations with your cash availability. So the timing will pretty much match that process and allow you some comfort. We have different types of demand loans, ranging from commercial property purchase to we have construction loans available. We also have self-liquidating construction. One might ask, what's the difference between a construction loan and a self-liquidating construction? A construction loan normally is more of a long-term facility, which is repaid on a monthly basis. So for example, a source of repayment independent of the construction project. For example, you're building an apartment or you're building a house. The source of repayment is independent of any earnings to be generated from the asset being built. So because that source of repayment has been identified, it allows you a longer time to make that repayment. With a self-liquidating construction, it's pretty much like developing an apartment. If you're you're developing a shopping complex, with the understanding that you'll be selling the associated units and using the units using the proceeds rather from said sales to liquidate your liability with the bank. So that right there differentiates the two. We partner with Dbj. Dbj oftentimes have loans that they extend to the public. So we are what you call an approved financial institution, AFI. So you would come to First Global Bank, and based on the offerings that the Dbj would have on offer at the time, you could obtain said loan through First Global Bank. You must, however, satisfy the terms of First Global Bank in order to access these financing. For example, Dbj currently has the Dbj Recovery Loan, which is geared at pretty much assisting persons at, subsequent to the onset of COVID, where they're offering up to a minimum of 5% and up to 10 years to repay on that loan. So that's a good rate, almost matches that loan offered by Exim, that SMTE. It almost matches it, 5%. We also have BPO expansions, where you have your business processing outsource operation. We are able to look at your receivables and provide you financing based on the nature of that business. We have our livestock product, we have our farm expansion product, and we have here what we call an early stage financing. This facility is specifically geared towards new businesses. What this does is normally banks, as Dwight from Exim had mentioned earlier, the banks and other financial institutions tend to look more favorably on businesses who have a long history of operation, and which would allow them to rather make a proper assessment of the business in order to extend financing. So what we've done at First Global Bank is to develop what is called an early stage financing facility. Normally, businesses within the first 24 months are considered startups, and lending is normally not extended to these kind of facilities, this type of businesses. So what we have now, early stage financing, it says to you, once you're operating for a maximum of 12 months, a full 12 months of operation and any ensuing months thereafter, it allows one to look at your business, make an assessment of that first 12 months of operation, do an assessment of that 12 months, look at what your forecast is, compare that to what you would have achieved historically, to pretty much see what are the possibilities that you might be able to realize these numbers as you put forward. Once we find comfort in those numbers, we'd be prepared to lend you against that facility up to $15 million. It might be on an unsecured basis, and it might also be secured. It depends on the nature of the business that you would have presented. Again, your business plan must be able to speak for itself. The cash flow projection must be clear and properly thought out to pretty much give the assessor the idea that, listen, this business is something that we can trust based on the numbers put forward and is therefore a good risk. We have our receivable financing. This is something that can help you when you have a cash flow need. You want to take on a new project, but you don't have the money necessary to take on the project. You can pursue, for example, there's an auction or a tender rather, you can go out and bid for certain contracts. For example, the government wants to build a new school and you're in construction, but the developer must first put up the money to do the work and then claim along the way. Receivable financing, once you've bid and you won that contract, you can come to First Global Bank and say, listen, I have a contract for $500 million. Really and truly, you yourself might not be able to come up with the first $100 million to start the project. But you can come to First Global Bank and say, listen, I have a contract for $500 million. I intend to get payment of $50 million every 6 months once we've initiated the project. You can come to First Global Bank, get a receivable financing of the first of 75% of that $500 million. Utilize that proceeds on a drawdown basis because payments will be made against invoices. You can pay your salary, pay your staff, pay your suppliers, do the work, make your drawdown request from the government. They would then, those payments would then be assigned to First Global Bank. Upon receiving said payment, we will reduce the liability that you'd have with the bank, and it allows you to come later and draw down again against the residual balance until the project is completed. Once the project is completed, we now move into releasing the excess funds to you, because you would have satisfied our obligation through the means of the receivables from the government. One must note, however, that interest is payable on a monthly basis on these kind of facilities. So what you'd have to be prepared to, at a minimum, pay what the interest exposure would be once you are taking on this venture. But what it does, it provides you an opportunity to take on projects that one would consider not feasible on a normal case. Receivable financing is there to help you with that. Cash secured facilities. These are facilities that are, as it says, cash secured. And it's normally geared towards business in their early stage, when you pretty much don't have that history in operation. You don't have financial data to support your business, because oftentimes small businesses, we pretty much don't maintain proper financial data. We don't deposit our money in bank accounts. We don't have income, and we don't have any financial statements. So those things make it hard to do an assessment. But if you have your cash, you can come to the bank and say, listen, I want to start to create a credit history. Because you see, the truth is, sometimes we say we have the cash, why would I come and borrow? One would advise, if you are entering into business, or you are in business and haven't done any credit at all with the banks, and you have cash right now, I would advise you to take that cash and approach a bank and say, listen, I need to get a loan against this money. You have $10 million, we can give you $10 million for a demand loan. Those are loans that are structured again over a long-term period, and it's amortized, and interest applied on the reducing balance. If it's a line of credit, then the margin would not be, you wouldn't get a $10 million loan against $10 million for a revolving line, but instead you would have to put on a term deposit $10.1 million to support the, you would have to put on a term deposit $10.1 million to support a 10.1, 10% of a million, 10 million is $11 million, right? You'd have to put $11 million on a term deposit, and that would support your request for a revolving line or a receivable financing or a credit card, right? So what it does, if you have that cash, it creates that credit history. So later on down the line, when you are looking to expand your business, the bank would then look at it and say that you've borrowed money from a bank. It doesn't have to be, you don't have to be that you come back to the same bank that you've done the cash secured borrowing from, but if you approach any institution, the mere fact that you had a loan and you repaid it timely, that would all go well for your business upon your second borrowing when you're seeking to get $50 million, $100 million. So create that credit history. Once you have the cash, create that credit history. It provides you an opportunity to grow. All right, so the loan requirements. basic loan requirements that we have is that you must have your last 3 years financials. And as it says here for early stage, it would say 18 months. But again, once you've completed 12 months for the early stage, it opens the door for the opportunity. You must have at least 12 months bank statement, and this must be consistent with your financial year. If your financial year is January to December, then we would like to have 12 months bank statement that matches January to December. What this does, it gives the bank an opportunity to validate the income that you will be representing in your financial statement. And so again, you are urged to do your deposits. Even if you have an expense that must be settled today, once you have the cash, deposit in the account first before you make that spend, as it allows for easier validation of your earnings. All right. Also, another requirement is that you must have satisfactory credit reports, and this will be for the shareholders and the company. You ask what satisfactory credit report means. A satisfactory credit report is primarily when you have outstanding liabilities, but that you have not recorded any delinquency exceeding 30 days within the last 12 months. So once you are in that ballpark, then you are viewed to have a satisfactory credit report. And just as we mentioned earlier, when you have the cash secured facility, and because you've paid it on time, with a satisfactory credit report showing this cash secured facility, it then says to the lender, we can lend this individual. This is one who honors his obligation, and it pretty much opens the door for you for lending. Interest rate on our loans, they are negotiable. They are dependent primarily by the type of security that is presented. So if it's an unsecured loan, then one would expect that the rate on that loan would be much higher than it would be for a cash secured loan. So it ranges. It also depends on the tenure of the facility, the risk associated with the funding, and again, the type of security. That's a repetition. I guess it really goes down to show that once you have the security, it really adjusts and impacts the rate that you would end up paying. But the point to really note here is that interest rates are always negotiable. It's just a matter of how much we are able to satisfy terms and conditions as presented by the respective facilities. There I end my presentation. I look forward to any questions.
Thank you, Gennardo. And I'm sure that everyone is like, oh my goodness, that was too much. They're probably not sure if they can remember everything, but I'm sure they will have questions. But you know what, I was just here thinking, Gennardo, maybe I need to create a course where you come back and explain better how you could prepare yourself better for a loan. So maybe that $24,000 might have to go up to $30,000 if I add you to it, you know? So,
I'd be open to that.
Oh yeah, I know you want to get paid. I know you. Right. So we're open now for questions. So we have Vanessa Vassell. Does Exim have locations outside of the Kingston area? Dwight?
Yes, I'm here. My apologies. The mic was off.
All right. So do you have locations outside of the Kingston area?
Kingston? Not at the moment. So while we don't have locations currently outside of Kingston, we do visit clients, you know, right across the island. As a matter of fact, we were just down Negril a couple of weeks ago, and we might be in Portland in June. I think we will be in Portland in June. So we do what we call our road shows from time to time, and we visit clients, different, you know, section of the island.
That's good, because surprisingly, we have lots of clients outside of Kingston.
Indeed, we do. And a lot of our customer is in fact from outside of Kingston.
Yeah. So what if a business is in operation for a year and they're looking toward expansion phase and need some financial assistance? but they don't have collateral. What would they have to do?
All right, collateral is a stickler because most of our loans is definitely secured. It depends on the type of business, because we do have some partnerships that I didn't mention in the presentation. For instance, if you are an exporter, and these are segment specific. If you are an exporter, we do have a partnership with JMMB, where we have a $10 million guarantee. So you'd have to, well, it's JMMB requirements and qualification. But let's say, for instance, you want a loan for $13 million. And I use 13 because our 10 million is up to 80% of the total loan. Now, JMMB asks for their 20% to be secured. So let's say you want a loan of $13 million, you have that $3 million to secure, then you can use a $10 million guarantee from Exim to secure that other aspect of it. So you could get a loan of $10 million, of $30 million, for instance, with only having a $3 million security to satisfy JMMB's requirement for their security aspect. If you are an exporter, this is specifically for exporters, an exporter's guarantee.
Okay.
If I may,
yes,
Daniel.
Go ahead.
All right. So to that question, we also have at First Global Bank. To the question, we have at First Global Bank, once the borrower can establish that they using the financials necessary. From the financials, there's a section on it that speaks to the equity. Once the equity position is positive, the bank would be prepared to lend unsecured up to 50% of that equity position as established by the financials, or 50% of the guarantee's net worth, of the guarantor's net worth. So in the event that the owner of the business has their personal property and is free from any mortgage, their motor vehicle, and all other assets that they would have, and maintain a substantial net worth and is now in business, the bank would be prepared to lend up to 50% of either the company's net worth, being the equity position, or the guarantor's net worth, whichever is higher. But at the same time, the amount extendable will be dependent on the affordability of the institute, of the business. Put further, like Dwight mentioned, we have partnership with Dbj, which provides a Dbj guarantee of up to $30 million. And but $30 million are up to 80% of the project, depending on which is higher, which is lower rather. So if 30% of the project is less than, if 80% of the project is less than or equivalent to $30 million, then you can get that full guarantee coming from DBJ.
Yeah.
At the same time, as Dwight also mentioned, the bank would require you to have some skin in the game. So we won't necessarily utilize we could take the full guarantee from DBJ, but we would want for you to add some level of contribution to the project. So to say that unsecured lending is available based on your net worth and the individual's net worth plus the company's net worth. And again, on the financial statement, this is where you find the equity position, and your personal net worth is just your assets minus your liability. Up to 50% of that position, the bank will lend on an unsecured basis.
I have a question for you, Gennardo. What is the turnaround time for the early stage financing once all documents are submitted?
Normally, it depends on the workload that's available, because these loans are processed manually. So I would say give an open window for a month to allow for any back and forth that might present itself and the workload that is existing. It doesn't necessarily have to go up to a month, but I'm saying if you have plans, give yourself a month so that you won't have any frustrations, because you might have to come back to you for additional information. There might be delays because there's a lot of loans ahead of you. So for comfort, I would say a month.
Okay. And Dwight, what are the loan amounts for SMEs and the repayment period? Yes. and the period that it takes for it to also be completed.
Process.
Yeah, processed.
Okay, so the loan amounts, I would say typically between 5 million to 500 million. That's where I would go. And not all the loans, in terms of the processing time, not all the loans are equal. In that, if you have a larger loan, you would have to go, well, we would have to go through different levels for approval. For instance, if you want, let's say, a loan of 80 million or above, 70, 80 million or above, those loans would go to our committee for approval, and risk committee, and then board, right? So the timing of the loan, because our board meets once per month. So if it's a loan that has to go to board for approval, and you are submitting the documents maybe just before the board meets, then we wouldn't be able to catch that board. So it would be the following board. So I would say comfortably, I would say about 6 weeks would be, for one of the larger loans. For a smaller loan now, a loan of probably, let's say, 40 million or under, then I would say probably about the same 4 weeks time. And that's given, if we have all the documents. Because sometimes, a client may submit 90% of the documents and we cannot move without getting everything. And, they are thinking that the time is running and we should be processing the loan. But the truth is we can't process the loan until we have all the required documents. So I would say similar 4-week turnaround time if we have all the documents. And if it's a smaller loan. I hope that answers it.
I have a question here. What is the interest rate and the terms for the Exim bank loans?
Well, the interest rate, it varies because we have so many different type of loans. The ones I quoted, those are special loans that have special requirements, and they are specially funded as well. So generally speaking, I would say for the Jamaican dollar loans, I would put it between 7 to, and I'm going to include the JMEA loan, which is a smaller one. I would say 7 to 12%. 12% being an unsecured loan, even though it's just a small loan. And for the US dollar loan now, I would say, well, generally speaking, we start roughly about the 7% for a US dollar loan. I'm not saying that we wouldn't be able to negotiate depending on a project, because as Gennardo would also tell you that some of these negotiations are project specific. So we look at the project, we look at all the factors, and then we would say, we would be able to give you a loan of X, or we negotiate the rates, but the US dollar rate is usually maybe like 1% lower than the JMD rate.
Okay. Are there any use of fund restrictions?
Use of fund? Well, depending on your project, when we're doing the application, we would say what the purpose would be. If it's, let's say you're doing working capital, for argument's sake, then, a lot of things can be included in your working capital. So as long as a working capital item, then there wouldn't be any restriction. So it all depends on what the approval is given for. If it is that you get an approved loan for equipment, of course, you wouldn't be able to use that to pay your staff, so to say. So it's specific to what you get the approval for.
Okay. Someone asked, can your life insurance be used as collateral when seeking a loan?
Yes, your life insurance can be used, but it is the cash value of life insurance policy, not the not the face value. The face value is, you know, if you die, then, you know, for instance, you have a face value of $20 million. If you die, your beneficiaries will get $20 million. So we don't use that as collateral. But if you have some cash on it and you have $10 million cash, then we use that as security.
Gennardo, does the financials have to be audited for the early stage financing loan, or can they be in-house?
Oh, they can be done in-house, but they must be well prepared. So each line has to be connected to each other. For example, your notes must be consistent with what is presented on the face value of your balance sheet and your income statement. The numbers once the numbers are prepared that it really reads consistent with expectation, then no problem with it being done in-house. And preferably done by an accountant though, rather than just pulling from a system.
So the accountant has to be certified accountant?
And what if somebody who has accounting, for example, somebody with an accounting degree who knows and understands the principles of accounts, no harm in that being done. But again, if you can get a chartered accountant to at least to assist, that adds more value to it, and the reliance on the data would be greater than if it's just somebody who have just relevant understanding. If you have a chartered accountant, we can check to see that it was prepared by a chartered accountant. So again, it puts more confidence in the data. Okay,
great. What about persons?
But to the question, it doesn't have to be audited.
I know. So what about persons in agriculture and fishery? You have any special loans for them?
Yes, remember we had mentioned in the presentation, we have a farm expansion facility. So if it is that you have your farm and again, you maintain your financials, your bank statement supports the operation, you can come to us and say, listen, we want to expand our if let's just say you have your fish ponds, I don't know the language that is used, but those ponds that grow the fish, come to us and say, listen, we need to build out a couple more of these. We've been in business for the last 5 years. This is what our business look like. We have these customers, these are our suppliers. This is how we've been doing business, and we believe that we can take the next step forward if you give us the financing. And we see that, okay, historically 2 ponds have allowed you to generate $5 million in earnings. And you say you want to add an extra 3, then we would want to look at that and say possibly you should be generating at a minimum $7 million extra. You see what I'm saying? So we can look at that historical performance, use it to be gauged by, and use that to gauge your future. And so we'll be prepared to lend you against that. But you must be maintaining your financials and your bank statement must speak for itself.
Yeah. So what is the cap on secure loans offered to startup micro businesses?
Okay, so that would fall under our early stage financing. The maximum on that is $15 million. But again, that is dependent on affordability because normally in the early stage of business, most business run a loss. So right away they'll be at a disadvantage and wouldn't be eligible for financing. But if for some reason this business in the first year is generating a profit and it's a substantial profit, then they'll be exposed to the maximum of $15 million.
Okay, thanks. Dwight.
Yes.
Kimona Paris Campbell is asking, would a graphic design and sign manufacturing company that provides printing materials and signage for tourism companies and hotels be eligible for a loan with Exim Bank?
Yes, definitely. A graphic design, we have had in our portfolio graphic design clients. So definitely you're eligible for a loan. That's part of the whole productive sector.
Okay, but they fall under tourism and manufacturing, both?
So it depends. If the work is being done, so one, you would be eligible just by the work alone that you're doing, right? So if it is that you want to get specifically you want the loan through the Tourism Enhancement Fund, that SMTE, then all we need to do is to see the linkages between the tourism sector. Now, how do we see the linkages? You know, you could speak to it, one in your business plan and two in your financials. So if 25% of your business is linked to tourism, then you would be eligible.
Okay, great. Gennardo, Rupert Daly is asking, I know you said interest rates will be negotiable for the early stage loan, but what is the range we can look out for?
That's for me or Gennardo?
That's for Gennardo.
So for that one, Rupert, as we mentioned earlier, is that interest rates are dependent on security, nature of business, the type of project that you'll be undertaking, as well as the risk associated. So what we'd range from is from 8.75% to a maximum of 16.75%. That's from being secured to being unsecured. And secured here is pretty much against hard collateral being like property, land, motor vehicle, stuff like that. If it is cash, then it will be lower by far. But against hard collateral, 8.75 minimum to a high of 16.75 unsecured.
Okay.
And I know this is not a question, just a bit of information to our business partners out there that the Bank of Jamaica has increased interest rates. So, you know, largely, most banks will move interest rate by probably about 1.5% basis point in the near future.
Okay. Some Dreams Reality Trading wanted to know, can a pension plan cash value be used to secure a loan?
Repeat that question for me, Kenna.
Can a pension plan cash value be used to secure a loan? I think that's similar to the previous question.
Well, your pension is your pension, you know. And pension is one of those things that you're not able to touch and to do a lot of things with. That's why you don't have access to it. And if you are able to use that as security, that would basically giving you access to that. So if someone wants to get access to their pension, all they would have to do is take out a loan, default on the loan, and the bank would have to take that, you know? So they wouldn't be able to use the pension plan, so to say.
Okay.
Well, if I may on that one,
Go ahead.
I've done some proposals though. Not that we used as a collateral, but it supported a means or a possible means of repayment because the individual was high up in age. So let's just say you're about 59. So you know that your retirement is 5 years along the line. And you have shown yourself to be a valid employee. So chances are you wouldn't be leaving, they wouldn't be firing you within the next 5 years. And you want to identify your possible source of repayment. And we could then look at the saying that we can give him a 15-year loan just as much, because at the end of 5 years you would have repaid down to a point and your existing pension balance is X. So based on that expected payout, you would be able to liquidate the position and still maintain a reasonable life going forward. So it's not that it will be used as a security or collateral as the word used, but that it can assist in obtaining financing based on advanced age. Make sense?
Yeah. Another question for you. How many years financials are required? And do you require a business plan and projections? I guess they just wanted you to say it again.
Mm-hmm. I'm assuming that in this case it's not for early stage financing, but if it is for early stage financing, it would be a minimum of 12 plus any, let me say a minimum of 14. Give us 14, first 12 months, and then at least 2 months to see how things has changed relative to the previous 12. And for established business, it would be 3 years financials required. It says, what was the next part of the question? If business plans are required?
Yes, and projections.
Well, for early stage financing, business plan would be required. For established business, it would be more of a company profile, and protection is required for either early stage and established entities.
You have anything to add? Go ahead.
I was gonna say, Gennardo basically answered the question from an Exim Bank perspective as well. With the only exception is that for new businesses, because we do new businesses, so we would ask you for your opening balance sheets as well as the business plan and your projection.
Okay, that's great. For startup loans offered from Exim Bank, what is the minimum amount offered and does it require collateral?
Yes, it does require collateral. Usually the range starts at $5 million, 5 million and up, depending on what your project is. It could be 5 million, it could be 50 million, but we definitely require your business plan. We require, if it's a 5-year loan or a 7-year loan, we want to see that projection going through to that 5 or 7 years. And definitely we do need security. We definitely need security.
Okay. Priscilla White is asking, would a BPO and online service business be qualified for the tourism loan? Also, will this business be qualified to receive a loan of credit?
BPO, yes. Yes, we do loan to BPOs. Under the tourism, I think we could link it. Remember, it's not static, So BPOs, though, mainly businesses overseas, they're earning US dollars, or foreign currency. So the link is easy to show that at least that 25% link to tourism. And what was the other part of the question? So they can get the SMTE.
Line of credit.
Repeat for me.
If you offer a line of credit as well.
A line of credit for BPO. Well, we'd have to look at the proposal to see whether or not the line of credit, because we do look at the proposal. And when you come with a proposal to say that you want a line of credit to do a particular thing, when we assess it, we may say, well, based on how the proposal is, perhaps it's best to take a medium-term, facility, because you're taking, for instance, equipment, and it's best to pay for those equipment over a longer period than to put your company under pressure, to meet a short-term obligation. So we do look at it, we assess it, but most businesses can qualify for whether short-term or the medium-term.
All right, great. So that's it. Those are all the questions that we have remaining. And I just want to thank you guys for joining us, being patient and answering all these questions, I know that going to the bank is always a very stressful situation when you have business. So I'm happy to always invite you guys to speak on what you have so that it's clearer for the SMEs to be successful in their rate of completion. Yes. And
can I say something before you go?
Yeah, go ahead.
I just want to say to the medium enterprise or your micro, small businesses that, taking on financing or, applying for financing, sometimes it can be a lot. Gennardo can tell you, the documentation is a lot, but, if you have a good business and good, you have a good business plan and your business is running, don't let the exorbitant documents deter you from getting the financing need that you need to expand your business, right? We will walk you through the process. We will assist you with those documentation. We will tell you exactly where you need to go to get what you need to get done. Right, Gennardo?
100%, 100%.
And thank everyone for joining. And thank you again, Dwight and Gennardo. All right.
It was a pleasure.
Bye.
Likewise, likewise. Bye.